Tesla stock, to a lot of people's surprise, was up 0.66% today, a little bit over a half of 1%, and up another third of 1% here in after hours. Yet, the Nasdaq fell over 1%. What does this really highlight about Tesla stock? Well, something very specific, and I'll talk about it here in this video. Now, the meat and bones of this video will be the events coming next week. Now, I say this tentatively because I could be right, I could be wrong, but based on the technicals, on logic here, you could be looking for some market downside in this upcoming week. We had Goldman Sachs that came out last night and urged their clients to buy protection on their portfolios. I'll share with you exactly what Goldman Sachs just said and what Walmart's CFO just said that also spooked the markets quite a bit in the last 24 hours. We will take a look at the earnings for this upcoming week. There is still some very important earnings in our markets, as well as the option activity today from hedge funds and institutions in Tesla stock. So by all means, grab a beer, grab a coffee, whatever you would like, and let's get started. Now, we will talk about Tesla stock a little bit later on throughout this video because I think there's other context you need to this before we talk Tesla specifically, and it'll make sense throughout this video. So let's start this video with what Goldman Sachs just said yesterday. Goldman Sachs sees a big jump in volatility coming in April. Goldman Sachs says its volatility model sees an average of 21.5 on the VIX in April compared to the current level of 15. And Goldman Sachs says buying calls on the VIX for the $16 call expiring in April could be a good way for individuals to hedge their portfolio. Now, if you're curious what the VIX looks like, it looks like this. It's been very low for a long time. You hit a high briefly around 23, really about 22 back in October, November of 2023. This was after a 10.5% pullback. So suggesting the VIX could rise to 21 or higher would support at bare minimum 5% of a pullback in the S&P, maybe closer to 10+%. If you guys are unfamiliar with what the VIX is, it's known as the fear index, the fear gauge. And what it is it measures contracts in the options market on the S&P 500. So when the VIX spikes, that means more puts are being bought. There's a rush to protection. When the VIX falls, that means there's more calls being bought on the VIX. And yeah, the VIX has been low for a while. There's been a lot more calls being bought on the VIX than puts. Goldman Sachs says, we believe the VIX at historically low levels, the SPX close to all-time highs, high demand for upside asymmetry, and our model estimating upside to the VIX, and 5 upcoming macro and micro catalysts offer a compelling case for investors to own VIX calls. Over the past 30 plus years, VIX has averaged 19 in April, and we see upside risks to the current low VIX levels, given current macro environment and upcoming macro and micro catalysts. S&P 500 index skew is close to multi-year lows, indicating that the upside asymmetry is crowded, and we believe VIX calls would be an attractive hedge in a case of a pullback in equities. Now, this is a pretty aggressive call, saying just to go out until April, and I believe it's for a specific reason. It has a lot to do with the Fed coming next week. In 4 days, 18 hours, 56 minutes from now, you will get the next Fed rate decision. You can look at this every single day like I do. Just type in a Google Fed rate monitor tool, pull up the investing.com one, and I think this one is by far the best. So it gives you probabilities of what the Fed is going to do, and it's as simple as that. There's a 2% chance of a cut coming in 4 days, and there's a 98% chance of a continued pause. Now, on March 20th, next week on Wednesday, we get a new summary of economic projections. So we're going to get a new dot plot from the Fed that's going to basically show you where the Fed members think GDP is going to be, inflation, where all of these different metrics are going to be. Here is what the dot plot looked like last time we got one on December 13th, 2023. Looks just like this. I shared it many, many times around December 13th. Now, the markets tend to trade off of this quite a bit because it's not just showing you one Fed member's opinion, like if Fed Daily or Fed Bar or Fed Kashkari, whoever it is, gets on a podium somewhere and they give their own opinion. Yeah, that's one thing. That's one person's opinion. This is all Fed members' opinions. And looking at the average opinion can give the markets a better gauge of what to go off of. So back in December, right here, the Fed funds rate projection. So in December, the Fed funds rate projection by the end of 2024 went to 4.6%. The estimate was 5.1% in the September summary of economic projections. So the Fed was actually forecasting more rate cuts in the December 13th summary of economic projections. Well, think about it like this. That whole time period, from really the second half of 2023, you've seen a lot of disinflation. What's happened since the start of 2024, you've seen the opposite. You've seen inflation actually reaccelerating. Every single CPI, PPI, PCE report we have gotten in 2024 came in hotter than expected. Not one has come in line with estimates or slightly lower than estimates. So this begs the question, is the Fed going to be more dovish, meaning, more rate cuts, or is the Fed going to be more aggressive, meaning higher for longer, or potentially even putting it out there that the Fed may need to raise rates if inflation continues at this pace in 2024. See, I think that's a problem because when you look at December's pricing in for the markets are pricing in 1, 2, 3 rate cuts in 2024. What do you think the probability is of a rate hike? What do you think the probability is? Well, it's 0. It's like negative if I were to put a probability on it. There's only a 1.2% chance out of 100 that you will see no rate cut in 2024. It's basically not even a thought in investors' minds, let alone a rate hike. Now, I'm not going to sit here and say the Fed next week is going to forecast needing to raise rates. The Fed's not going to say the next move we're going to do is a rate hike, more than likely. That's not going to happen. But the Fed is going to very clearly say to the markets that if inflation continues to run this hot, they can and will raise rates again. And that's not something that is literally priced into the markets at all. That's where I think we have a bit of a problem on our hands. Now, if you look at a stock like Tesla, or you look at other small mid-cap stocks, look at some of your smaller cap bank stocks, interest rate sensitive names, they have not been doing well in 2024. Yes, you have went from pricing in 7 rate cuts to start 2024 down to 3 rate cuts. But I think the recent weakness, part of it that we have seen in Tesla, has to do with the fact that the Fed may actually need to raise rates again, or imply that they will. So I think in a weird way, stocks like a Tesla that have been getting absolutely destroyed, sure, have estimates been falling? Are people negative? Of course. But I do think the other aspect of that is inflation is coming in hot, and some investors are saying there's a decent chance that the Fed may not lower rates in 2024. And if they do, maybe it's only one time. I don't think the Fed is going to come out next week and forecast 3 rate cuts. I think the Fed's going to come out next week and go back to neutral, instead of the Fed the last couple of weeks saying, yeah, we think we're at the peak of this hiking cycle. The Fed's going to say, well, maybe we're not at the peak. Maybe we may need to raise rates again if inflation continues to come in this hot. If you take a look at Goldman Sachs Global Financial Conditions Index, this takes into account the VIX, positioning in the markets, interest rates, credit availability, cryptos, all kinds of different things. And it gives you this chart of financial conditions. Believe it or not, you're at the lowest level of restrictiveness in the economy, as per Goldman Sachs, that you have been at in a very, very long time. Okay, money is easy right now. And I think the Fed understands that with stocks continuing to rise, again, I don't think the Fed expected this aggressive of a rally back in December when they did their last summary of economic projections. You also have crypto hitting new all-time highs. The Fed, if they were to come out and be super dovish next week, they could literally risk reaccelerating inflation just because asset prices would likely continue to go higher. And I don't think that's the scenario the Fed really wants to be in. And I mean, just to make this super, super simple, I don't think the Fed wants to back themselves into a corner with this narrative that they're going to cut rates next, that there's no chance of a rate hike. What if inflation comes in at 0.5% month over month again for 2 or 3 months in a row? You think the Fed really wants to put themselves in a position to need to lower rates because they've continued to say the next move is a rate cut, we're expecting to cut rates soon, things like that we've heard over the past couple of months? I don't think so. Powell made it very clear back in 2022 and 2023. The Fed would rather go too high and stay there for too long rather than not raising enough and having inflation come back. So it's as simple as that. Markets are pricing in 3 rate cuts. Maybe some people are pricing in like 2, right? Whereas there's no chance of a rate hike. That's not even on people's radar. I'm saying the Fed's going to put the optionality back on the table. That optionality going back on the table, one, is going to make the markets a lot more data dependent, and it's going to add a lot more volatility to upcoming inflation reports, but it does likely give you a 5 to 10% sell-off in the markets, because if you look at the NASDAQ, you look at the S&P, this rally that you have seen from the October-November lows, I mean, you've priced in 7 rate cuts to start 2024. Now you're down to 3. The reason why you've continued to rally is people are like, well, the next move is a cut from the Fed. That's bullish. We're bullish on stocks. If there's a question mark on that now, whether there's a rate hike or cut coming next, you could imagine the kind of downside that we could see in our markets. Now, again, with a stock like a Tesla, I think you're a lot more priced for that. I think independently investors have been, pricing that in. And I would expect a little bit less downside from Tesla, maybe a little bit more downside from some of your overinflated areas like AI stocks, semiconductors, and other big tech. So I do think if we get a correction like event, 5, 10, 15% down from here, Tesla stock would likely fall, but I think you've already experienced most of the drop. And I think that is a reason why Tesla did outperform today. Now, you did have some good news out of India. India is lowering the tariff amount that companies will have to pay if they agree to invest like $500 million into the country in 3 years, something along those lines. Great news for Tesla. Those rules were probably specifically made for Tesla, but I think the biggest kind of thing that happened today was actually that Tesla's price for bad news. The sentiment is so bad that at some point you're just completely washed out and the sellers are gone. Now, also coming next Monday, or this upcoming Monday, you're going to get the GTC conference with Nvidia. This is a live in-person conference expected to host 80 to 100,000 people. By far the most hyped up event you have seen in a very long time. Now, the expectations are high. They're very high. That Nvidia is going to announce something really good, something revolutionary. Of course, are they probably going to? Yeah, I think betting against Nvidia is always a bad idea, but I think the expectations are likely too high, and that could lead to a, what we've seen, buy the rumor, sell the news event, because after earnings, after that first sell-off that you got on earnings down here when the stock was $750 or so, people said, well, the stock already sold off. You had earnings, the stock sold off 10% before earnings. You had earnings, the stock went higher, and then people are like, well, we're going to have this event, this GTC conference coming up. So I think all of this was a buy the rumor type of situation for this conference, for this upcoming event. It wouldn't surprise me to see a sell the rumor event. Now, specifically with Nvidia, you have started to really turn down now. Today was the 4th day in a row that you have closed lower than you opened, and that's typically a problematic sign. Now, with the NASDAQ today, the most notable thing of all happened. You're no longer bullish on the NASDAQ. You have changed the trajectory, and now you are bearish. If you take a look at these trends, this channel that the NASDAQ has been in, you have officially rolled over, and you are now under this support line, this trend support line. And you broke under that pretty cleanly today. Pretty clean. And you closed close to the low. The end of the day, you kind of seen a little bit of a drawdown. Now, today was also triple witching, so that's something to keep in mind. It wouldn't surprise me if you did see a lot more bearish positioning. But you did get a break to the bullish trend in the NASDAQ, and that likely does mean a lot more downside from here is possible. And from just a technical perspective, your next level of support is likely down here at this 50-day moving average around 427.28. Now, I think you could actually hit this level before the Fed on Wednesday, just the kind of jitters around what the Fed might say. And then following the Fed, you could see quite a drop. Now, it depends on what the Fed says, obviously, how hard they signal towards a potential rate hike. But if the Fed is as aggressive as I think and really wants to put the optionality back on the table, then the NASDAQ could fall a lot more from here, like a lot more from here. If this entire rally has been based on not 7 or 3 or 5 or 4 rate cuts, but on the narrative that the Fed's next move will be a cut, that it doesn't matter how many cuts, the Fed's going to cut and the Fed's going to keep cutting after that. We're not going to get another rate hike. You have to understand that has been the entire market's rally. Earnings obviously came in better than expected. Not crazy, but better than feared, I guess is probably the right way to put it. This rally has been based on that narrative, that the Fed's going to be cutting next and there's no chance of another rate hike. The data has been coming in suggesting the Fed may need to raise rates. I think the Fed is crazy if they don't put the optionality back on the table, because next thing you know, you're getting to the next Fed meeting, which after March is going to be, after March is going to be May. So you have the rest of March, you have the whole month of April, and then you have the next Fed meeting in May. If you get another hot inflation report heading into May, I mean, the Fed's going to be in a real problem if they don't signal they will raise rates again. Just the Fed signaling they'll raise rates again will put more restriction on the economy. It will raise bond yields, likely sell off risk assets like the NASDAQ, like maybe cryptos. And that would actually be good for the Fed's narrative. The Fed doesn't even have to raise rates again, just signal that they might raise rates again. And that's enough to get you, 10% lower on the NASDAQ. Now, it depends where you're counting 10%. If you're counting 10% from the all-time high that we were just at, that would put the NASDAQ down to about, and I'm looking at the triple Qs here, that would put the NASDAQ down to about 404 on the triple Qs, which would still be downside from here of about 7% or so. Honestly, if the Fed's as kind of aggressive with signaling that they may raise rates again if they have to, then it wouldn't surprise me to do that drop relatively quickly. Remember, stocks typically take the staircase up and the elevator down. Now, could I be wrong here? Of course. Could the Fed come out and say they think the recent trends in inflation are, infamous words, transitory and just temporary? Of course. But again, the fact is, I don't think the Fed wants to put themselves into a corner here. And that's essentially what they would do if they came out next week and were just super dovish and said, yeah, we still think we're going to cut rates. That would be putting them into a bad position coming the next Fed meeting if inflation does prove to be, stickier in 2024 and even rising like we see now. I think 3-month annualized PCE or CPI, whatever metric it was like 6.9%, the 3-month annualized number. So yeah, you've seen a lot of bad inflation data. So I think the Fed's going to be a little bit more aggressive than some people believe. Now, what's actually interesting here is what Walmart's CFO just said, which I don't know what to make about this. Walmart CFO Lan Borden said lower income customers have been pulling back spending on fast food and other types of restaurants. You're pulling back spending at McDonald's? The consumer cannot be strong. And I think part of the drop we have seen the last couple of days has to do with this, because everyone's kind of thinking the same thing as I am, kind of confused. Like, if you're pulling back at McDonald's, you're definitely not doing that great. And in a market which is really dependent on the consumer spending money to drive EPS and drive earnings growth in 2024 and really any other year, it's not great when people start cutting back from McDonald's. Here in this upcoming week, we will get some earnings coming out. There's some important companies kind of here and there. Xpeng Tuesday pre-market could be important for Tesla, and specifically Tesla in China. Wednesday and after hours, Micron and Chewy, as well as KB Home, Five Below, Guess. They could be important, but by then, Wednesday and after hours, it's all going to be focused on the Fed, and I think you're going to be in for quite the drop coming Wednesday in after hours. Again, could I be wrong? Of course, I'm not afraid to share with you my open, honest, and transparent opinion. And I do have some puts on the markets, and I will let you guys know in probably the next video what specifically that trade is. But Thursday pre-market, Intuitive Machines, you do have Darden, some other names as well. Thursday and after hours, you have Nike, Lululemon, and FedEx. All of these companies are really important for the state of the consumer, especially FedEx. If FedEx has bad numbers, then that's a really bad sign for the economy. For Tesla stock today, you had 753 orders totaling $988 million with a positive order value of 50%. So pretty neutral overall in the options market. And again, Tesla really did outperform today. Small cap stocks really outperformed. And that's part of the reason why I believe Tesla also outperformed, because small caps outperformed. And there's nothing special about what we got today. There's no rhyme or reason why small caps really outperformed. We got Michigan consumer sentiment numbers that came in a little bit lower than estimates, but for that to cause an outperformance of small caps and a huge sell-off in the NASDAQ, that doesn't make a whole lot of sense. I think it's as simple as some areas are priced for bad news, some areas are priced for an aggressive Fed, others are not. The areas that are priced for an aggressive Fed, small cap stocks, interest rate sensitive stocks, Tesla trading lower than it has traded since briefly May of 2023, and this low that you've seen when Elon was selling stock towards the end of 2022 and the beginning of 2023. I would say Tesla is more priced for a hawkish Fed and maybe even a rate cut into the future than other stocks are. Same is true with small cap stocks, still being like 20% away from all-time highs, whereas the NASDAQ is like 10% higher than all-time highs, right? So I think the areas that were not priced for a hawkish Fed sold off today. That's why the NASDAQ was down 1%. Areas that are priced for that, seen some inflows. Makes a lot of sense to me. Now, if the Fed is truly, and you know, I want to be a little bit careful how I say this, because I don't think the Fed's going to be super hawkish in terms of like solidifying they're going to raise rates again. The Fed's not going to say we're going to raise rates. Or we're not done raising rates. The Fed's going to say if the data continues to come in strong, we will and can raise rates again. That would be a change of tone. That would be relatively hawkish compared to what we have seen recently in the last couple of months. The Fed has not talked like that in a while. And I think that would be seen as really hawkish to the markets at this point, considering there's 0% chance the Fed will raise rates again. With that said, if we get the more hawkish outcome from the Fed, then Tesla stock could fall to, let's say, like 150, right? I think that's a pretty good level. Tesla stock could fall to like 130, but that would still be downside from here of like 30+%. I don't think that's as likely, even if we do go through a 10 to 15% pullback from here. Let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel. You guys have a fantastic rest of your day. If you guys want to come see the trades that I put on today in our markets, I don't think it's too late to be hedging out portfolios. I think we get a little bit of volatility before the Fed, but I think the real show is coming on Wednesday. Let me know what you think about this down below in the comment section. Again, link to join the trading community down below in the comments in the description of this video. Go ahead and follow the X account as well. We'll be doing a lot of talking over there and great conversation over this weekend. It's Michael Tyler. Look forward to seeing you over there. Thank you for watching. Enjoy your weekends, and I will see you in the next one.